Unemployment and layoffs are said to be relatively stable. The Indeed artificial information tracker is showing ads that mention AI or related keywords are surging, outpacing general hiring. Is this the trend Americans should be following? Let's start with you, Mitch.
Okay, well, look, I think AI is overvalued right now, and I think we're seeing a lot of the companies, even the Mag 7 companies, when they say they're investing $20 billion in AI, their stock and share price becomes even more irrational than it already was. I think we're throwing a lot of money at AI. I think right now, maybe one day, it will be able to deliver what the promises are, but right now the hype, I think, outpaces what it is, and I don't think jobs are being replaced by AI yet, because I don't actually believe that. I believe that we're in a bit of a pullback because of the consumer spending that's been up, but I think people are a little more tepid right now because credit card debt and consumer debt is at an all-time peak.
That is very interesting because NVIDIA is thinking about investing yet another $100 billion into OpenAI, but that's currently on pause for the time being.
Right. Marc, what's your assessment of AI right now in these Mag 7 companies as well as the general market, how it's affecting the market overall?
Well, I hate to disagree with my good friend Mitch, particularly when I'm not there on set to look him in the eye and disagree. It's a hell of a lot more fun that way. And by the way, it is good to be back with you guys. It's freezing cold. There are pinstripes under the sweater, I promise you, but it's too damn cold for just the pinstripes today. Look, I do disagree with Mitch, and to speak to the first question that John posed as it relates to the impact of AI on the labor market, we are seeing week after week announcements of major corporations cutting jobs. We saw Amazon just last week alone cutting 17,000 positions, directly pointing to the advent of AI as the reason for it. We saw similar news out of UPS. Guys, we think as it relates to the labor market, our research shows that the impact of AI taking jobs away from people is currently underestimated, and is causing more of the weakness in the otherwise stable labor market. That's actually a good thing when it comes to interest rates because it gives yet another reason for the Fed to bring them down, but that will not happen until we get a new Fed chair in the spring.
Well, that's the CEO of Market Rebellion rebelling against his actually fellow commentator, but
that's
we'll
okay.
Leave it
that's
there.
Okay. That's okay. Marc he got Bitcoin wrong, so you're probably going to get this one wrong too.
We're going to get into that, but before we get into valuation of different assets, let's actually move on to the Federal Reserve. President Trump nominating Kevin Warsh to be the next Reserve Chairman, replacing too late Jerome Powell, whose term ends this May. How do you see the Fed changing course, if at all? Let's start with you, Mitch.
Yeah, I think that you've got a bigger systemic problem with the Federal Reserve because you have 12 voting members, 7 of which are appointed by the president, by a president, right? And then you have the other 5 floating members who are voting members. So, to get a majority is a bit difficult, and it's been pretty much stacked. The Federal Reserve has over 23,000 employees across the nation. It's a gigantic entity that has a budget of about $7.5 billion a year. And they are extremely political right now, and they are very skewed 90% to the Democratic Party. So I think that changing policy or changing the way that the Fed does things is kind of a big problem. Janet Yellen, for example, came from the San Francisco Fed. When she went to the Treasury, she was given $8 million from the big banks to go out and give speeches. And that's quid pro quo in my book. She and her husband gave over $200,000 in contributions to the Democratic Party. That's politically partisan, no matter what you say. So the Fed is not independent. It's not a bank. And it's not part of the federal government. And we've got to change the way that we view the Fed and restructure the Federal Reserve because they are the problem. Their policies cause today's problems.
Absolutely. I agree with you 100%.
And to that point, Mitch, yes, exactly. It was Janet Yellen's policies of quantitative easing, which led us to where we are right now, as well as Jerome Powell. Everyone says he's been so reserved, but he cut right before election. So he really started the politicization of the Fed. Marc, what do you make of Kevin Warsh? Was he your pick? The markets are not necessarily super happy about him, given his more hawkish stance on cutting interest rates.
Yeah, so I mean that's kind of a mixed bag, Kristen. So I mean, as you know, I was wrong about this. Mitch is going to revel in that, just of Bitcoin. But I said on this show several times it was going to be Hassett. It was going to be Hassett. It was going to be Hassett.
Right.
All the sources I had in D.C. said that the president had 100% decided that it was Hassett. Well, a couple of weeks ago, he said, you know what? I like Hassett and the job he's in now. It's going to be Warsh. The guy's qualified, youngest ever to join the Fed, appointed by President Bush at the tender age of 35. Known as sort of a hawkish dove, certainly as compared to Hassett was, but I think a smart choice. And look, too much is being said about the sell-off that started on Friday being caused by the choice of the Fed chair. I think that's just ridiculous.
Fair.
Interesting. Well, you know
look,
what?
yeah.
I have to get this in, Mitch. Bitcoin below $80,000. Let's actually, there's more. Silver plunged 30% on Friday. Gold dropped 9%, but yet over 100 S&P companies are due to report this week, including Amazon, Alphabet, and Disney. So tie those two things together. Why are these precious metals and Bitcoin, digital currencies, dropping, and at the same time during this week where 100 companies are set to report?
Okay, so you had me on last Tuesday, and I told you to take profits in precious metals because we were going to see a correction. And if you look on the website, on Newsmax, I said, you know, on Thursday morning before Friday's correction, I said, we're overdue for a correction. The prices have gone up way too much. So look, what we're looking at right now, silver's still up 18% for the year right now as of this morning, and gold is up 10%. Bitcoin is down 11%. So if you look at the asset classes, I mean, still the Dow is only up 1.5%, and the Nasdaq is flat. So the outperformers are still precious metals. And as I said last year, on the website, if you take a look on our website, I said commodities will outperform this year like they did last year. I'm still very bullish. Just because we sold some of our positions and took profits, look, bulls make money, bears make money, and pigs get you know what. So there you go. I mean, you got to take profits when you can, and you got to have rules to trading.
Yeah, I mean, high volatility, many people, there's a lot of opportunities there. What's your take on commodities and what we're seeing in the market there, Marc?
Yeah, so look, Mitch was right about commodities last year, and I think he was even right about commodities coming into this year. We were ripe for a sell-off, particularly in silver, particularly in gold. But once again, a lot of the four-letter networks, this is not one of them, by the way, like to try to take one headline and attach it to another one and come up with a narrative to explain gyration and volatility in the markets. The sell-off in precious metals was not due to the nomination of Warsh as the Fed chair. Don't believe the hype, guys. There were a lot of big institutions, and I'm actually surprised, Mitch, that you didn't mention. A lot of people I was talking to on the hedge fund desks on Friday were talking about some pretty major short covering, even from JP Morgan in particular. I think what happened last week was profit taking. I think the algorithms kicked in.
Yeah.
There was some big institutions caught really short, and they needed this to cover. But I remain bullish on precious metals. Guys, just for it live, Trump announced a $13 billion precious metal reserve for the United States. $13 billion.
That's true. As Mitch was talking about, in terms of pigs getting slaughtered, people being too greedy, sometimes you do have to take profits off the table so that way you could bring the bacon home.
But there was also,
Thanks so much.
There was also a problem. There was also a problem with one of the ETFs in Asia, the UBS ETF, that had a problem that drove these prices. The banks are still, the bullion banks are still kind of short. So I think you've got to watch the March expiry. But I would still be bullish on metals generally.
Yeah, we like bulls. We don't like bears. Thanks so much, Mitch and Marc.
Sure, bye.
Great to see you guys. Thank you.